Florida's real estate market is showing stress. Here's what you need to know. Florida's housing market isn't falling apart, but the pressure is building and the warning signs are now impossible to ignore. This shift didn't happen overnight. It's the result of years of growing strain, soaring insurance premiums, new flood zone, reclassifications, regulatory changes that raise the true cost of ownership. Now, those pressures are surfacing in visible ways. Declining home values in select cities, properties sitting longer on the market, and foreclosure filings steadily increasing. In this episode, we're going beyond the headlines with data-backed insights on which Florida markets are feeling the heat, the real reasons behind the slowdown, and a smart checklist to help you protect your investment, whether you're buying, selling, or just holding on markets or shifting. The key is understanding where, why, and how to stay ahead. Let's get into it. The 3 housing market signals we watch closely. To understand where Florida's housing market is headed, we track 3 key indicators: home price trends year over year, average days on market before a sale, distress activity, especially foreclosure rates. In September, Florida had the highest foreclosure rate in the U.S., with 1 in every 2,182 homes receiving a filing, according to ATTOM. That doesn't mean every city is in decline, but it does mean that some local markets are feeling the pressure much more than others. Why Florida housing costs are rising so quickly. Today's monthly mortgage payment in Florida often includes more than just principal and interest. Home insurance rates in Florida have skyrocketed, far surpassing the national average, especially in coastal counties. Many homeowners now pay several $1,000s per year in insurance premiums. Add to that newly updated FEMA flood maps in South Florida, which have pushed tens of thousands of properties into high-risk zones, requiring flood insurance for federally backed mortgages. For condo owners, newly mandated structural inspections and fully funded reserves mean higher HOA fees and special assessments. Individually, these costs may seem manageable, but together they're changing the equation for many homeowners. Where the cracks are showing first. Let's talk about the cities where market stress is most visible. Jacksonville made national headlines this summer for year-over-year price declines, an early sign that buyer leverage is growing. Sarasota and Northport are seeing average marketing times stretch toward 90 days or more. In Pompano Beach, the typical home now sits on the market for nearly 4 months. Cape Coral and Fort Myers show both price drops and longer closing timelines compared to last year. These aren't just isolated stats. They're trend lines pointing to a slowing momentum across multiple markets. The Broward County flood map shock. On July 31, 2024, FEMA's new flood maps took effect in Broward County. The impact was immediate. 89,000 parcels were reclassified into higher-risk flood zones. In Miramar, over 25,000 properties were affected. Pembroke Pines saw more than 22,000 parcels move into mandatory coverage zones. For many homeowners, these new flood insurance premiums aren't just an added expense, they're a deal breaker. For some, it's the difference between staying and selling. Florida condos face. A new reality, condominium ownership in Florida is being fundamentally redefined. In the wake of safety reforms, buildings must now undergo regular structural inspections and keep substantial reserves. If a building doesn't meet these new standards, lenders often won't finance purchases, forcing many buyers to pay cash or walk away. With fewer buyers and rising maintenance costs, condo units are spending longer on the market, especially in older buildings. How investors are responding to the shift. Institutional investors, once dominant in Florida's pandemic housing boom, are now becoming far more selective. Their buying activity has slowed across the Sun Belt, and their retreat is opening doors for individual buyers. This shift in investor behavior means more homes are lingering unsold beyond 60 to 90 days. Sellers are offering price cuts, closing credits, and repair concessions. Negotiation power is tilting back toward traditional buyers. Florida Real Estate Playbook: How to Protect Your Money. Whether you're a homeowner, a seller, or a buyer, here's how to stay financially secure in Florida's shifting market. If you own and don't plan to sell, focus on maintenance, especially roof condition and wind mitigation. Shop for insurance annually and compare professional quotes. Keep all documents current and inspection ready. If you need to sell, price for the current market, not last year's highs. Don't wait. Speed often beats stubbornness in a slowing market. If you're buying, target listings that have been sitting 60-plus days. Ask for interest rate buydowns, closing credits, and repair allowances. Always request a written homeowner's insurance quote and flood insurance estimate, if applicable, before making an offer. And above all, work with trusted local experts, a real estate agent, a licensed inspector, and an insurance broker who understand your neighborhood's unique risk profile. Debunking Florida population myths. There's been talk of a mass exodus from Florida. But here's what the data shows. Miami-Dade County lost about 67,000 residents from 2023 to 2024, but international immigration largely offset that. Statewide, Florida continues to see net in-migration, though at a slower pace than previous years. So while local affordability pressures are real, claims of a widespread population collapse aren't supported by the most reliable data. Florida's housing market doesn't collapse all at once. It bends, it wobbles, it settles, and in some places, it slips. Today, we mapped out the fault lines so you can protect your investment and make smarter real estate decisions in uncertain times. If this breakdown helped you, please like the video, share it with someone who owns or is shopping in Florida, and subscribe to BuzzFrame for weekly housing market insights tailored to data, not headlines.